Hey, what's up, everybody? It's Stephen A. Williams, president and founder of creditrepairshop.com. I found an interesting article online. It was from Call Miner. That's the website. Uh, I'm not, some of the time I'm reluctant about showing stuff on here, uh, the websites, because I was contacted once before for doing a video where I showed uh, a website, and there's some rules on how long you can show it before you can do pieces, but you're not allowed to show too much. So I'm just going to kind of briefly go through it because I think that this is very important information when it comes to the state of the debt collection industry. This is what they're talking about for 2020. And so some of the subjects that they touched on was they showed the stats for the debt collection industry on what are their major types of businesses that they're having to collect for. Like there's really only about 4 or 5 major ones that has like the overwhelming amount of collections. And then it talked about auto lending delinquencies, medical, the debt collection practices, which we always talked about here on this channel, and the effects on the pandemic on debt collections, and then some talked about some debt collection resources, which is really how to deal with debt collectors, and we talk about that. Well, so for the first part of it, it said here in 2018, the total revenue for the debt collection industry was $11.5 billion, a decrease from $13.5 billion in 2013. It's always crazy how they say, they always get these numbers from like 4 or 5 years from before. This is 5 years ago. But now it says that consumer debt grew almost 14 trillion in 2019, an increase of 2.3 trillion dollars since the peak of the Great Recession in 2009. Basically, what I see from that, from what had happened, was from 2008, 2009 Great Recession period of time, people had went down and then people had started recovering. And no matter what your situation is, over time you will see gradually that you'll recover. And we can see here from the numbers that by 2013, uh, people have recovered. And then the cycle started back where people maybe had overspent again, and then it started to decrease, or people just paid down debt. A lot of people, surprisingly, just paid the debt down and didn't get into trouble. And then it says here that as of February 2020, total outstanding debt for credit cards was $4.225 trillion dollars as of February 2020. This is a very high number. Now, check this out. It says that people with that paid on their credit cards, not paid them off every month, 43% of the people uh, didn't pay off their credit cards. So the actual number of people who didn't carry balances was actually higher than I had even thought it was. I thought it was going to be a lot lower. 57% of Americans who have credit cards pay their balance off every month. So 43% of the people who they don't pay their balances off. Now, when we think about the numbers, it is millions of people. And when you look at the credit cards, one person could have multiple credit cards. So when they throw in this number of the 43%, the amount of the $4.225 trillion dollars could actually be more skewed with that 43% because those people who don't pay off their credit cards every month could have multiple credit cards that don't and that they don't pay them off every month. Now, 60, let's see here, auto loans, 40, let's see, participation, consumer market approach. Okay, 63% of the consumers in the United States have a mortgage as of 2017. 44% of consumers as of 2019 have auto loans. So 44% of us, all Americans, have an auto loan. Other people either pay cash or they Ubering around, doing all that type of stuff, riding scooters. And 25% of Americans have student loans. And that's what they're saying. And then let's see here. Delinquencies. According to the data, Federal Reserve Bank of New York, the percentage of the total debt balance in default or delinquent by 90 days or more as of Q4 2019 by loan type. And this is where they mainly focus on these four, like I was saying earlier. 1% of all mortgages, so 1% of that 63%, 1% of that 63% of people who carry a mortgage are behind either 90 days or more. 11% of the 25% of the people who have student loans are behind on their student loans, 90 days or more. 8% of the 43%, 8% of the 43% people who carry balance is behind on their credit cards 90 days or more. You might be wondering, why do they figure the default on 90 days or more when you could be 30 days later, 60 days? The way the algorithm is written for the credit reporting industry and for giving you credit, me credit, everyone credit, is they have this standard where they want to know what is the outcome, the basic uh, risk ratio of an individual of having a loan and not going in default after 90 days. That's why they always use that as like their milestone linchpin, is that they're like, what, give me the stats on if I give this individual a loan and 90 days go out, are they still paying or not still paying? And then they base that off of what you've done before. That's why they're looking at the delinquencies of 90 days or more. And that's how they can feed into their algorithm. And you don't even have to stand in front of anyone, or someone doesn't have to review your application. The computer can just say either you're approved or denied within seconds, because that's what they're looking at. So now, the role of debt collectors and third-party debt collecting services, according to Experian, this is where they're utilizing debt collectors to do a lot of their work. And so the healthcare industry is using uh, 37.9% of their collections that they have, they job out the debt collectors to collect on it. 25.2% uh, of of student loans they use debt collectors to collect on that percentage. Financial services, 12.9%. Now you might be saying, well, I if you owe a credit card and they're trying to collect it, they don't always use a debt collector at the beginning. They'll usually try to do that internally. And but the reason why is that there's a rule that a financial institution cannot be also a debt collector. They have to give that out to someone else to do that. They cannot do both. They are not allowed to do both. That is the rule. Government services, they use to protect for their owed amounts that are owed, they use 10.1% of their accounts are sent to debt collection companies. These could be like if you have fines, like a library, didn't turn in a library book, you have a fine. Dog, like your dog got caught and you had a ticket for that. Some of the tickets that the police give you, but it's rare. They usually keep that within the system, because they know that if they stop you, they got you. Uh, Retail, 3.1% use debt collectors. And you might be saying, well, that seems like a low number, but really, when you think about it, the number in retail is, you got thousands of companies, really millions of companies, if you look at even smaller companies. And so that 3.1% represents a lot of different companies. Telecom, 3.2%. Basically, uh, it's going to be if you have a collection, maybe satellite bill, where they're trying to keep you, but they may have a debt collector that's going to try to collect on that debt before they end up letting you go. Most of the time, with those types of debt, they're going to just, sell them off. Utilities in our area, our state, it's not deregulated, so they're going to get a debt collector, and that debt collector is going to be hired by them. Mortgage companies, that is minimum. It says 2.0%, and telecom was 3.2, and utilities was 2.2. These are very low percentages. Mortgages 2.0%, because mostly they're not. If they know if you're going to be able to catch up or not. And then other was 4.7%. So let's go down here and let's see here. It said that industries with the largest consumer debt. It said credit card debt. The average household has U.S. household has approximately 15,000 credit card debt. In April 2019, 9 million credit cards originated with the aggregate credit limit of $34.6 billion. This is an 8% increase in year-over-year originations. Student loan graduates in the U.S. today graduate with an average amount of $29,000 in student loan debt. That's an increase. It said actually decreased. So a lot of people decided not to go to school. Medical debt, 41% of working age Americans are paying off medical debt and have medical bill problems. 52% of debt collection actions in the United States include medical debt. And mortgages, average mortgage debt is 150,000 per household. April 2019, 640,714 mortgages originated, comprising $179 billion in mortgage lending volume, average increase year over of 6.5% year over year. And auto loans in April 2019, 3 million auto loans originated, resulting in $52.8 billion in new loans, making a 3.6 increase year over year origination, even though the auto lending industry had an increase of defaults, on auto loan. Auto loan lending practices impact delinquencies. The number of subprime auto loan originations increased in 2016 despite a steady rate of delinquency. So even though people were defaulting on the loans, the subprime loans that have more chances of defaulting increase. That's why we see the auto loan advertisements, no credit, bad credit, low credit, good credit, all credit, push, pull, drag, all of that is all out there. That's why it still increased, even though it increased the loans increased, even though the amount of the loans that were made for subprime loans were increasing. At the same time, you would usually see where it would draw back. It was actually going up. And the reason why, the way I estimated, is that even though an individual maybe went bad on an auto loan, they were able to go back and get another auto loan after a certain period of time. With that bad credit, they were able to go get another auto loan. But we were seeing that these auto loan subprime lenders are like traps, or like death traps. So let's see here any more interesting things about that. 70, okay, historical auto finance companies originated and hold more than 70% of subprime auto loans, 70%. Whoa. That's because they can't even, it's hard for them to sell them off now because they're like, what is this? This paper? You're not mixing it up with A grade paper? Most of this debt is going to go bad. We don't want to end up buying this. So they end up having to make the loan and hold the loan and collect on those loans. Medical debt. The leading cause of bankruptcy in the United States is because of medical debt. 63% say they used up all or most of their savings to cover medical costs. 77% delayed vacations or other major purchases. 75% spent less on clothing, food, and other essentials. 42% picked up more hours at their job or picked up a second job. 37% borrowed money from family and friends. 14% changed their living situation. 11% sought aid of charity due to medical debt. And I know that this is medical debt is huge. We see a lot of people at the credit repair shop that have medical debt. Uh, I'm very fortunate that my wife and I are able to afford a very good insurance policy, even though we pay uh, a good amount per month. I think we pay a little over 12,000 a year for our insurance. Uh, but looking at the surgery that my wife had with a double lung transplant, just one of the bills that we got for just the transplant plant was a little bit under $1 million. I think it was 908, not 908, 900,000, eight. How do you say it? 80,000. It was like $988,000. It was like $12,000 below $1 million was for the transplant surgery itself, not counting the hospital stay, not counting all of the other stuff. And the only amount that we had to pay out of pocket was our deductible of $6,000. And I can just, even with that, with $6,000, I understand a lot of people cannot pay or, have trouble paying that. So, we got our monthly of $1,000 per month for the insurance, and we picked a higher plan. There's plans that are lower than that, but because of our age, because of her health situation at that time, we chose a more expensive plan because we do things that we want to have covered, like we planned that buying that insurance. But on top of that, you got us that we had paid the 12,000 a year for the insurance, and then you got another $6,000 in deductibles. That can be very difficult for people to pay. So I truly understand what they're stating about here. Medical debt can put people into bankruptcy. Let's go into here. They talk about the practices of debt collectors and what they can and can't do. And I have a video. You can refer to my channel, thecreditrepairshop.com, if you haven't subscribed already and you saw that video. It talks about the things that they can and can't do, because even if you owe a debt, there's still things that they can't, like, harass you over. They can't threaten to put you in jail. They can't even threaten to sue you if they don't intend on suing you, even though that's a thin line. But they cannot make these types of threats. They can't call and harass your neighbors over it. They can't continue calling you outside of certain hours of the day. And if you notify them to only contact you in writing, they can't even call anymore. Can't call anyone anymore. They have to communicate 100% with you in writing. So there's certain things that they can and can't do, and I think that you should educate yourself on those if you're dealing with debt collectors, because it can take the stress off of you, so you can have a clear mind of how you're going to deal with those debt collectors. And also, when dealing with debt collections, you should always, get your bearings and put together a plan on working out stuff. And you should open up the communication with them and let them know where you're at, because if you don't let them know where you're at with your situation, they're just going to think that you're trying to run and hide and not pay. Okay, so let's continue here. The effect of the pandemic on debt collection says it's no secret that COVID-19 has and will continue to affect every industry, including debt collectors. It says that as more and more individuals and businesses default on loans, collections isn't necessarily legal in many states. Collection isn't necessarily legal in many states. That during the pandemic, once these national emergencies are lifted, which they have been lifted in most states, collections will go back full stream 100%. It's just certain states. Foreclosures and evictions uh, are not legal in certain states, not all, certain states. So, even though they're stating that here, uh, it's not uh, where debt collectors aren't going full stream in all states. In certain states, we get a lot of people that are getting letters from debt collectors. I just did three, I think just this week, and I have like three more on my desk right now of people that have court summons that they need us to respond to, or they want to see if it's worth trying to fight the debt collector for court summons that they're going through. So it is, action is ramping up. It's really, really, really ramping up. As a matter of fact, I placed another ad to hire some more customer service people from my company because there's more and more people contacting us every day, either here on YouTube or by email or calling us, and they're saying that the debt collectors are like putting a hammer down on them and they want to just know what are their options. And there's always options. I'm not saying that you'll always win against a debt collector, but there's always options on dealing with it rather than just, running and not doing anything and letting them get a default judgment against you. So I'm going to end the video here. Thought this was a very interesting story. I'm going to put the link to the article on below the video here. If you need help with your credit, please visit us at thecreditrepairshop.com. If you need your reports and scores, please go to the website your3scores.com. I really appreciate it if you do that. That's one way that I monetize the channel. You can also get the t-shirts. I started pushing the t-shirts like everybody else pushed the t-shirts. And if you need my cease and desist collection activities letter, if you need my statute of limitations letter to make that collectors stop trying to collect it that's past statute of limitations to collect, and also my debt validation letter, those links are below this video. Once you submit your information, the letters or you're redirected to a page to get the letters, and it's also emailed to you because I want to make sure. If you have a Gmail account, though, some of the times it takes a little bit for that email to hit to the Gmail, and you might have to also check your spam box. Also, I want to make a quick thing too. It is not me responding or not anyone else responding to any messages here on YouTube. You will see my name of my company, Credit Repair Shop, outlined in black, not where it's clear like yours. Those are imposters, those are fake people. We will never tell you to email to a Gmail account or to someone's personal email. Everything goes through the company or through the toll-free number for our company or the live chat on our website for our company. We do not have someone else that does any responding here other than me on here because I want to make sure that that I answer. You watch my video. I want to be the one to answer you. So I would like to thank you for your time and see you on the next video.